TGIF, everybody. Same to you, Claudia. Hope everyone had a good week. Had a decent week. Dollar went my way. EG starting to go my way. So we'll see if we could get a breakdown. I need to close over 89.50 for a 2-week reversal on this. So at the end of the week, I see what we're doing. We're still higher on the week in EG. Here's the candle, hard to see. The off number is 89.50. So
Dale, I cannot see your screen. It's a black screen.
Huh. I wonder why. Where's the share screen?
I can confirm that. It says it has started screen sharing, but I see a black screen.
How about now?
Yeah, got it.
Okay, those black screens. See, Twitter's down and I was down for a few minutes. Anyway, thank you guys. So we need 89.50 for a 2-week reversal. 2-week reversals are simple. You know, all you do is count back 1, 2, and see where the market closed 2 weeks ago. It's kind of based upon market memory to the left, and we're not there yet. Okay, now I think the reason it could work is this. One, 2, 3. So we get another wave down in the dollar to 96.20 or so. I think that cable's going to lead it. You know, maybe we get a rally back towards this low or this moving average here up towards 29, which would still keep it in a bear market. Okay, so you look at this daily and you look at the Euro daily and red candle, right? So far. I think the pound will drag it up. If the pound's going to blow, Euro's not going to go in the opposite direction. We'll just underperform cable on the upside. Okay, so here's Dixie. You know, daily it's trying to hold this. I know some people think we're going to hold this level right here, and it'll give it a look of a right shoulder here. But on a weekly basis, kind of a negative candle, just like EG, it didn't turn down. The off numbers down here. It is a reversal week, and we'll see. You know, it is possible that we just flush out this low in the next week or so, maybe into the Fed at the end of the month, but it's still an uptrend. I think the market has to hold this low, 95 on any break. So I'm thinking down towards here, and then the blow off move to 99, 102, then a bigger bear market correction in the dollar. Any questions on what I'm thinking there? Okay, anyone? Okay, let's take a look at, Blake made a good call yesterday during phase on the yen. He wanted a rally to sell. He got it. I think this is what he was talking about. We were here early in the morning before the yen turned, and Blake was looking for shorts, I believe 850, 860. So nice call, Blake. We'll see if we get a break to new lows. I think the key thing to watch is if the Dixie takes out these lows right here. Let's just go here. Dixie takes out these lows and the yen does not take out these lows, which is kind of which way I'm leaning. That's going to be a pretty important market tell. I think Blake thought we could go to 107.50. He'll confirm it in a little bit, but excellent call. Was hoping for the rally. He got it. And now we're headed back down. All right. So, you know, my misstep this week was in the crude. You know, I was selling rallies at 58 and 59. It got blown out. Stopped out, blown out, whatever. That's a little dramatic. Stopped out. And then you have to say to yourself next, but you know, this is starting to look more constructive. It better fail from here for the bears, but I almost lean now towards buying a break towards 58, and perhaps we're going to get something like this from here, which would give us $70 crude. Raksha was on, she's pretty good, and she was a bear too, looking for 30. Something changed. She has some type of harmonic pattern. I think Greg is going to be with us. Let's ask him where his head's at on crude. He said if it got through 56, we'd get a continuation rally, but I believe he was still bearish. I'm going to be interested in seeing this. And why don't we wrap with gold if the yen's going to come down again? Well, we're not going to wrap. I'm going to wrap. So gold up a bit here today. Really got hit hard yesterday. Still my contention that this double top does not hold. Looks like it's forming some type of maybe symmetrical triangle. Maybe this is a 4. I want to ask, I could even ask Steve that this could be a 4. And then we break out of this triangle with one more thrust, just this range. Measures close to 1500, right? You have call it in round numbers, 1440, 1380, break out over 1440, tack 60 on, there's your 1500. I know a lot of people, I've talked about it, are still waiting for that test of the breakout, which it depends where you drew the line, but it could be anywhere from 1365 to 1373 or so. But
Symmetrical triangle
yeah,
as a fault is indeed the likeliest scenario there.
okay, so symmetrical triangle, Steve, and this would be a 4.
Yeah.
Okay, so then the last thrust out of a 4 means at least this wave is ending. We don't know.
Yes, that is correct. It should have one more leg higher.
Okay, so I don't know what you're thinking as far as magnitude. Maybe it's going to be an important top. Maybe some of the gold bears that have been completely blown out, and I've interviewed quite a few that are talking about, and you long term think we could trade $1,000, right?
There is a scenario, yeah, there is a technical scenario that we're going to trade a lot lower before a lot higher, but my long-term thesis remains the same, even from a technical, either from a technical or a fundamental perspective, that gold is eventually going to be a lot higher than it is.
Okay.
And, from a fundamental perspective, it's extremely easy to explain in a couple of sentences. Gold is a real asset, no matter how much you like it or you don't like it or whatever. There is absolutely no disagreement that the purchasing power of fiat currencies is, in the long term going lower. And, since gold is a metal that, has function any way you look at it, it should match up that and eventually move a lot higher.
Okay.
So, yeah.
Okay, and people could follow you on Twitter at Volgi. I want to thank you, Steve, for edifying our community today. You're the best interview I had all week, and thank you for that. We'll see. I remember years ago people talking about we could get to 1500 and then collapse again. So, yeah, you know how I remember everyone's trades. I remember that scenario. We'll see what happens, but a day at a time. Do the right thing today, and tomorrow takes care of itself. I think they're going to blow through those stops over that 1440 level.
It looks extremely likely.
And with the S&Ps blown to new highs, copper might have a little more life. Maybe this is an A and this was a B. We got a higher low, and while the S&Ps are blown to 30.50 or something, 30.40, maybe we get a chance up here at 280 to short copper. So copper, very poor performance compared to oil, right? That Dr. Copper is being sued for malpractice for imitating a bull market, impersonating one. So I'd love to see the S&Ps carry this up to say the 280 level, which would be about halfway back, 279, because weekly on copper, unless we start getting through 280, I still think we're going to test this. So we'll see what happens here in the copper. As far as S&Ps are concerned, I think we're getting, I'm going to try it next week for a trade anyway. I know the whole world is talking about the same scenario, aren't they? The megaphone top, It's done nothing wrong. I did point out to Super Bowl, our guest yesterday, that look at this divergence on the monthly. I mean, it's so glaring. I mean, the last confirmed high was back in the end of the year in 17, and then you go the weekly, and it's as glaring.
The long-term divergences are indeed astonishing, but most
Yeah, it could go on
importantly,
forever.
because if somebody wants to refer to the long term, then you are forced. It's the only time frame that you are forced to take into account fundamentals, because if you're looking long term, you cannot ignore fundamentals. So if you're looking at long-term divergences, then along with the technical aspect and viewpoint, you need to add the fundamental viewpoint, which is that there are also huge fundamental divergences in what stock indices are telling us and what the real economy is telling us.
Okay, and you're also getting daily. The high's not confirmed yet, but it's momentum's right at 70. The one out, the shorter time frames are diverging as well. Are you looking to take a shot for a top pick sometime next
Not
week?
yet.
Give a number in mind.
I don't know. I don't know, because in order for me to even consider it, I need to see like a big
Reversal.
reversal, and then I would consider it. Until that happens, really, there is nothing from a technical perspective on this chart in the short term that says sell.
Okay.
I am, guys, I'm personally looking at this, and remember the last sell-off, it was triggered by yields rising.
Yeah.
This is what I'll be waiting for. So
okay,
my trigger will be yields again.
They are still. In fact, I tweeted, and let me see if I could find the yields here.
When I mean rising, I mean by a decent amount, like 10-year goes above 250 or something. Then I think it's going to be.
Okay, I don't know. That wouldn't that be the biggest surprise of the summer? And yields are. I mean, they've already had a decent move. I mean, we're down to 193 in the 10-year, and we're up to 212. We're back inside the wedge, but it would just. No one would understand how yields could go up and maybe aggressively while the Fed is easing.
I think it's not too hard to envision. People sometimes can't see what's coming, because the media are responsible, as a big part of it is the media's responsibility. Of course, mainly the Fed's responsibility. It seems that the vast majority of the people have things backwards. So, for example, you hear so many people saying that the Fed, advocating that the Fed, for example, should cut rates because the market is telling them to cut rates, which is the exact opposite of what's happening. The market is front-running what it knows that the Fed was about to do, because their statements and the way they described the economy had started changing since some time ago. Add to that Trump's attempt. Now, you can judge it as you wish, successful or unsuccessful. You can call it a coincidence that the Powell did a 180 or whatever. I'm not going to go into that debate. But what the market is doing, it's front running what the Fed thinks it's going to be doing, okay, and not the opposite. So
I'm just saying the general public. You're a pro.
Okay, yeah. So
most people are going to say, how can yields be going up? The Fed is easing. That's the
So since the market had already priced in the Fed's 180 turn, and this has already happened, now I wouldn't be surprised if we see the usual scenario of buy the rumor, sell the facts, or sell the news. We can call it as you wish. And then the market is going to be looking for something greater from the Fed in order for it to start moving lower in yields once again. Because let's not forget the following: the Fed said actually that what it wants to do is create more inflation, right? Yesterday's inflation number was the 11th consecutive month that the core inflation, which is their favorite metric, they claim it's their favorite metric because it's less volatile, it's X energy, X food. It was the 11th month that it was above or at 2%, which theoretically speaking is their target. Yet they keep claiming that they want more inflation. So what if they manage to do that? in my opinion, if they have any chance in succeeding in any of their targets, is increasing inflation. But that's not going to be a good thing, right? And we know how inflation works with yields, right? So what if the market thinks that as long as they're doing what they're doing and they're not doing QE, what is QE? Buying what the private sector doesn't want to buy, having to do with bonds. Okay, so as long as they are targeting to increase inflation and they're not buying the bond themselves, why not yields going higher? Yesterday we had a 30-year auction, which was one of the worst that we've had, having to do with demand.
Okay.
So not a big surprise there.
So I guess the big question here is, and this is something else I'd like to ask Greg. I guess the question is this a 4 right here? Thanks, Joe. Is this just a 4? Maybe we top up here and then we're going to, I've heard people say 170, or was this it? So
it's too early to say.
Yeah.
In my opinion.
What would it take? I mean, we're back inside the wedge. What would it take? Close it back over, say, over 230, something like this?
Oh yeah, that's gonna be a big technical event. Yeah.
Okay. So who do I turn it over to?
To Blake, of course. For some reason, yeah.
Oh, okay.
I'm here for a few minutes before the producer prices. Good morning.
Go ahead, Blake.
Good morning, Blake.
Hey, buddy.
Yeah, how's it going?
Good.
Regarding yields, I mean, it is really interesting to see, bonds, bond yields, moving higher. Now, I mean, today I know they're lower, but you got the bond market. Let's go like the 10-year. The 10-year, looks like it's actually breaking down. Yields are going to go higher. Yet, we're on a path for lowering rates. So it's going to be really interesting to see what happens here, because the bond market, it has been rallying quite substantially. But if you look at it just technically and try to be agnostic about it, just more looking at the technicals. I mean, it was a false breakout to the upside here. It looks like we're going lower, rates going higher. Yet the market is still pricing in, however many cuts that we're pricing in. So it's going to be interesting to see, if the market can push the hand of the Fed a little bit here. Now, regarding, you had mentioned the dollar yen, Coach. I did short it overnight, or yesterday rather, at 108.49 was my average. And as I mentioned yesterday, I was going to sell it. Whoops, I didn't want to do that. I was going to sell it as we got up there, and I did. I had my stops at 63, and you can see the high overnight was 108.61. I came within a couple of pips of getting stopped out, and it reversed lower, and I actually just covered it at 27 about an hour ago. So, I took a little bit out of yeah, I mean, it was what I wanted to do. It was a trade I wanted to do. It's kind of offset a little bit of this. I'm still long some Euro Canadian here and long some New Zealand Canadian. So this one's just kind of sitting, and Euro Canadian's weakened just a little bit, but I'm in those. Not really too worried about it, actually. But I wanted to pull some profits just to offset some of the pullback in my core holdings here. So other than that, we do have producer prices today, and that's going to be probably a market mover. Everybody's wondering, is inflation going to continue to weaken? Remember, producer prices tend to lead consumer prices somewhat. So if you have producers that are operating at a higher inflation level, that's usually gets pushed down to the consumer eventually. And we've seen producer prices, like you can think like last year, producer prices were running a little hotter. CPI was still benign, and it started to push CPI up a little bit more. But if we see the producers, feeling less heat as far as inflation goes, is that going to trickle over to the consumer? And that, everybody's worried right now about inflation, or lack thereof. So it's going to be interesting to see what PPI shows us today. I'm, looking at the FX market. I'm not super excited about the currency market at the moment. What I'm trying to do today is I'm trying to buy the euro dollar as we dip down to 112.35 is what I'm trying to do. I don't know if I'm going to get it, but it might be more the producer prices that allow for a move down here, because if the number comes in a little stronger, we might get a euro dollar that dips down to this 112.35 level. And this is where I wanted to actually be long the euro, is right here. Like I said, I'm not sure if I'm going to get that or not, but that's what I'm looking to do. I'm looking to be a buyer of the euro down here. It's, when you're dealing in a summer market, it's, your expectations have to be less. What I always recommend to people is try to be more targeted in your entries. Try not to chase. FOMO. There's really no room for FOMO when you're in the summer doldrums as we are right now. You gotta be more of explicit about your targeted entries. Wherever the entries you're looking for, you wanna try to target that area versus chasing the market going one direction or the other. So, like in this case, the euro had a nice move this week. I'd like to be a buyer down here. And if we get down here, I'm going to try to get long down here at this 112.30 and change. Other than that, I can't really see myself doing a whole lot today. That doesn't mean that something won't appear, some opportunities that will scream, hey Blake, it's time to trade. But right now, yeah, I'm a little hesitant about being too aggressive in the market. I'm one of the trades that I am doing, and this is specifically for technical reasons. And I know I talked about this earlier this week. I don't know if I talked about it yesterday. It was my chart of the day a couple of days ago. Is this New Zealand Canadian? I look at this chart. You can see how I have a timer set up on it, or an alarm set up on it on this descending wedge. But I look at this as for right now, you can see this very long term, decade worth of data right here. I'm actually looking at this as being very supportive at the 618 retracement as we have a descending wedge into it. Possible longer term. I can even do this. Inverted head and shoulder pattern that looks something like this. I'm trading it as more as a wedge, but I've already got my starter position going. It's above this 127.50 right here, right there is where I start getting a little bit more aggressive. Navarro, from the Trump trade team, he was very optimistic about China, although China seems extremely irritated with the Taiwan situation at the moment, and the U.S. and Taiwan's relationship, and that seems to be a sticking point. But he said that the talks are going very well. Just to be patient with the talks. Look, anything positive out of China is going to be positive for the Kiwi, positive for the Aussie. I ultimately think that if there is, and you guys have heard me say this multiple times over the last several months, and I'm not, I don't want to beat a dead horse here, but a positive or a China deal, in my opinion, is going to create a little near-term euphoria that I'm going to sell into. That means that like equities are probably going to burst to new highs, and then I'm going to look to fade the market maybe a day or two later, maybe even sooner than that. However, when you're looking at commodity currencies, and that actually speaks the same for like the Aussie dollar and the Kiwi dollar. I'll let them spike up and then I'm going to sell them. But I'm going to sell those against non-commodity currencies. When you're talking about commodity currency to commodity currency, Kiwi to the Canadian, for example, I think that this is going to set up a great opportunity for a long New Zealand Canadian. Aussie Canadian would be a very similar situation, which I'm not so much focused on at this moment. But I think this is going to be a great opportunity to be on the long side of the Aussie Canadian. I'm not, like I said, I'm not long here. I'm just kind of speaking out loud, thinking out loud. But when you're talking about the Aussie dollar to the euro, or the Aussie to the pound, or Kiwi to the euro or the pound, those I'd rather be sellers. So, but against the Canadian, yeah, I want to be long, and I want to actually be a little bit more long on a Chinese trade deal. If it actually happens, I have to throw the if question mark out there. But these are just some things that I'm looking at for right now, and in the trades that I'm currently really more or less excited about. But let's see what happens with the producer prices. Like I said, if the euro dips down to the 112.35 on a little stronger, or even an inline producer prices print, I'm going to try to get long some of that the euro dollar down there, intraday. Just try to get a piece off somewhere down here. But other than that, I know Greg Horvat is joining us. He's been on vacation for like ever, right, guys?
Yeah, lucky bastard.
Yeah, we've got a lot of pictures. He's been on the beach, enjoying. And I mean, as everybody needs, especially traders, you guys need to take some time off. I remember the first time I met. For those of you guys that don't know, I trade for Gellos Capital, and FX Macro. I'm not going to use his first name. When I first met him in Florida, before I traded for him, we were talking and just chatting about life in general. And he's like, do you travel quite a bit? And I'm like, yeah, I travel a good amount. And he's like, what I recommend is you travel more. As looking back throughout my career. One of the things I didn't do quite as much as I do now is I didn't travel as much as I should have, early on in my career. And it's important to, we all trade, and we all trade, a lot. And, many of us, and this is what he was telling me, many of us only sleep, 3, 4, 5 hours a night, which is pretty true. Even for myself, I'm lucky if I can get a 5 or 6 hour sleep in. He's like, it's important that you have that downtime as a trader. And so I'm a big believer in taking some time off, and I 100% agree. Your body needs that. So
your mind needs that as well.
Yeah, your mind needs it too. So with Grega, hope he had a great trip, and I know he's going to be a great guest today. Well, I know you have another guest as well, but I'm not going to take any more of you guys' time. I'm going to get to producer prices. You guys have a great one, and TGIF, everybody.
Thank you, Blake.
All right.
I sleep 7 hours a day, guys, minimum. So I'm here.
Yeah, you're a prima donna too. So. All right. See you guys.
Thanks, Blake. Okay, so before we have the numbers, actually it's only 1 minute to go. I can mention we had quite interesting. We had Chinese trade balance today, and it was better than expected by quite a bit. And the interesting part was that the surplus with the trade with the US has risen to almost 30 billion. It's the biggest this year. So trade tariffs, yes. Do they work? I'm not sure.
Yeah, they do an amazing job.
Yeah, I mean, in the long run, it's obviously going to have an effect, but now, we're not seeing it yet.
Yeah, but the biggest effect is in, the pockets of middle, lower income people in the US, which isn't exactly what you should be targeting for. If you want to soften the trading balances, there is one way and one way only to do it, and that is to change somewhat the focus of the economy, right? There is no other way to do it, because if this is where you can find cheaper products, this is where people are going to try to find them. It's not that China is doing something wrong having to do with that.
And
Anyhow,
they feed into CPI as well, right? We're seeing this slowly. Bigger tariffs add to the prices of the goods. Okay, let's have a look. PPI 0.1 month on month, slightly 0.1 better.
Look at the year on year, Stelio, 2.3%. And yesterday we had the 11th, as I said before, the 11th consecutive month that the year on year core CPI was at or above,
yes,
specifically above 2%.
Although it's debatable which one is the favorite measure of the Fed. I mean, Yellen was always banging on about core PCE, which is
PCE, yeah.
But you're right. It's at target-ish, and the PCE is what 1.4, 1.5.
One thing is for sure. Even if we take the completely distorted. I mean, it just makes me angry every time I hear this BS view that Fed's job is to keep inflation rising at 2% per year, which, price stability is nothing but that. But even if we take that as to be the case, we are there. So I don't understand why they're trying to convince everybody that there is an inflation problem and they need to fix it. In my opinion, they just do it because they are willing to do absolutely nothing about inflation because that's not what they actually target. So at least they're trying to claim in advance that there is an inflation problem. So when inflation starts going even higher, they can claim that they're just fixing the problem.
Yeah, and we all know the original definition of inflation is the change of money supply, and goods inflation is what they're targeting. And we've said before, they've changed the formula a million times, always to bring it lower. So, it's a big debate, this thing. We could talk about it for hours.
Anyhow, stronger data here, as we see PPI in every aspect, PPI, core PPI month on month, year on year, core PPI year on year. So everything a little bit stronger makes it even tougher for them to cut. I'm not saying they're not going to cut. They will. But, it makes it tougher to excuse it. We had, theoretically speaking, stronger employment data last Friday, stronger CPI, stronger PPI, stocks at all-time highs, and they're going to be cutting at the 31st. Don't really start believing that they won't. I believe 99% they are going to cut 25 basis points. Anyhow, we're seeing a reaction here from the dollar being a little bit stronger, as you see. Euro USD at the lows of the day, it seems to want to follow yesterday's reversal. If you remember yesterday during the webinar, I was saying that we were retesting these broken channels, support as resistance. We did reverse from there. Let's see if we can produce some continuation lower, today. Other than that, let me just say that USD yen is the only one that doesn't seem to be reacting to, this reversal. In all actuality, it's actually testing now the support from this ascending channel. So USD yen seems to be underperforming the rest of the USD pairs. Not a surprise, of course. We know that it's more sensitive to what's happening with yield. Speaking of which, we had this conversation before. Let me just show you once again what we were showing. We had this descending wedge in yields. We broke above it. We consolidated for like 3 days. Yesterday, we had an acceleration higher. So far today, no real movement, but it seems likely that we're going to make it to 230. And 230 is quite an important support resistance area. And, depends on what happens from there. We can be looking for a continuation lower or for a bigger technical event and a move higher, which, as we said before, the market is really not expecting something like that. But I don't find it impossible to see something like that happening. Quite the opposite. And here is the picture in bonds themselves. They've broken down from this ascending wedge within this larger channel. So even we can even move back towards 125.5 and still maintain this uptrend. But that is some distance from where we currently are. I have a short. Those of you that are ForexAnalytix members, because I've created a pattern play, I have a short here in the treasuries. I would have rather made it in the bonds, to be honest, because they seem to have been moving lately. They have a bigger momentum in this pullback, but both of them are moving lower. Stelio, is Grega with us, by the way? Yeah, he is.
Trying to log in. He was trying. Oh, has he managed? Okay.
Yeah, he is. Let me promote him because I don't want to eat through the time if he doesn't have a lot of time. Yeah, let me cover one last thing because I have a question specifically targeted at me. We have a friend here asking my point of view in the Aussie Kiwi, and my point of view in the Aussie Kiwi is exactly the one I had. Grega, by the way, I've promoted you and I've unmuted you, so welcome.
Yeah, hi.
Hey, mate. So my point of view is the same. I see this move lower. I know it has taken a lot of time. We've stalled at the 61.8, but I see it having, quite corrective characteristics. So eventually, I expect that we can see another leg higher in Aussie Kiwi, and I think a break above 1054 is probably going to confirm that, one more leg higher has started. Since I had a question about that, let's begin from there. Grega, what do you think about Aussie Kiwi? Do you agree with this? Do you think there's another leg higher?
I think we may see more upset, especially as you see Aussie dollar very strong across the board. I think that gold will also continue to the upside from current consolidation, which can be good for us in general. So I'm thinking about this next leg towards 1.06, at least minimum. Not sure that we will go to a new high of the year, but probably at least wave C to the upside should occur. I can show it on my charts.
Okay, sure. Go ahead and take over the screen.
Okay. Okay.
Use the MXN. I like it.
Yeah, it's a big consolidation. You don't like it.
It is. I've been tracking the symmetrical triangle for a long time.
Yeah. So, regarding Aussie Kiwi, I mean, on the higher degree time frame, we are out of this triangle. So basically, on the longer term, trend may stay weak here.
Downwards.
Yeah. Yes. Also, we have on a daily chart only 3 waves of recovery. But for the last few months, you can see that we are just chopping around despite lower prices. So I think that maybe this can be a leading diagonal, just a first leg of a higher degree downtrend that will resume. Normally, the first leg of a 5-wave move, not normally, but in a lot of cases, it will be slow. Okay, so it can be wave 1, and maybe now we get a bounce for a wave 2. That's why I said that minimum to the upside, we should see wave C, right? So let's say that this is wave.
I'm not saying that it can't work out like what you're saying, but personally, I would like to see a bigger move higher towards a nice confluence of resistances that I have at 1083. 1084. So ideally, that's my target.
The only question is, if we'll get to this area, what will be the wave structure? Because if we get another high, then the whole move from the lows would be in 5 swings, right? So in such case, I think that wave count, or at least this longer term correction, will continue, that is underway already from 2015 low. So I think that if we get this push, this break above April highs, everything may change actually. Okay, but at least in the short term, I think that we will see this wave C, maybe wave 3 to the upside, but 1.06 will definitely be a very interesting and important zone.
Okay, but let's not spend more time in the Aussie Kiwi. I know that there are more popular.
So let's take a look on Aussie dollar. Now, I've been waiting for this reversal on Aussie dollar for a while now. This pullback was very deep, but was overlapping and in 7 swings. So I see this as a corrective wave B and expecting more upside. Now, recently we recovered very nicely, very strongly above this trend line resistance that also turned into support right there this week. So I think that there is a chance for more upside from here. Also, if you take a look on this hourly chart on the right, you can see a
five-wave move. Yeah.
Yes, and this 5-wave move occurred away from this trend line. Also, this was a 61.8% retracement as well of this bounce from the low. So I think that we will see eventually more upside here, and gold could actually help this pair to gain. Now, if we
I think gold is very easy to read at the moment. This is a textbook symmetrical triangle there.
Yes, exactly. So as you know, we got a very nice strong break to the upside, and now we are just slowing down. And longer the pause will be, more corrective will be its personality. Okay, so in such case, I think that there will be a greater chance that market will actually break to the upside. I'm looking for a push above previous swing high. The only thing that we have to keep in mind is that this reversal that occurred from the highs was actually a spike above this spike high from 2013 in August. Okay, that's the same level, as you can see. So, but based on the shorter term wave structure, I think that there will be more upside. We have a triangle consolidation on the way here. So it looks like it's a wave E already in progress. Now, wave E is also a corrective leg, should be made by 3 subwaves. And if you take a look closely here on the hourly chart,
yeah, we're already in B of C, in B of E. I mean, sorry.
We are waiting on wave C drop, and there is a very nice potential support here at around 1395. Now there's a 78.6% of this retracement of wave D, and then you have a 61.8% taken of wave C. Now this is the real and the right approach regarding the FIP levels when you're trying to identify where subwaves of a triangles may finish. So actually that's quite interesting zone, and if we're starting to see upside from the lower side of the range, I really think that next week could be very good for gold.
Yeah.
Yes, and on the other hand, Aussie dollar may, obviously, as I said, could also recover. Also, what I want to mention is that dollar Chinese yuan is also having a very nice structure. We have seen a 5-wave drop here, okay, in gray. We are looking at scale in gray. And then we have now a 3-wave recovery. So once this 3-wave recovery is finished, I think that more downside will follow here, which on the other hand may help Aussie dollar to gain as well. Okay, so
obviously the same applies to Kiwi. I mean, whatever else is going to do, more or less weaker or a little bit weaker or a little bit stronger, the Kiwi is going to do.
Yes,
it's going to follow the same path.
So we have a lot of very interesting developments here regarding Aussie. Also, I see, as I said, gold is strong. Crude oil looks to be strong. So those commodity.
What about crude? I wanted to ask you about it. We've had now this move higher. We've tagged the 61.8% FIB.
I think that
whole move lower. What do you think? What do you think this rebound is? What do you think the structure that we're working on?
I would not be surprised if crude oil will actually stay sideways. There's a lot of issues, as you know, going on right now globally. So I think that crude oil will be traded on both sides, and I would not be surprised if we stay just trapped in a consolidation here. Okay,
that's going to mess a lot of.
How about yields and bonds, Gregor?
I will go to that. Okay, just a second. I mean, the 10-year US notes, they are turning nicely to the downside, and I think. And
same with the Bund, with even more momentum actually.
So when we are talking about bonds and in general, I think there could be very good trade for FX on yen crosses to the upside. So I think that maybe Aussie yen, CAD yen, New Zealand yen, those have all potential for more upside in my opinion, especially if those 10-year US notes prices will come even lower, which after all they are turning down in 5 waves. Actually, I have a chart here. Just let me bring it on. Okay, so what happened here is actually we moved out of a triangle and we immediately reversed in 5 waves. And we are already now at a new swing low. So
I still see crude on your screen.
Are you sure?
I am. Can anybody confirm?
Yeah,
Yes.
same here.
What was happening to me?
Reshare.
But actually, I grabbed browser from the other screen, and
I believe you. It was happening to me. Zoom seems to be quite sensitive with my micro connection stutters because I never had this problem with GoToWebinar. I fixed it when I changed my router because I had a hybrid router that used both DSL and 4G. But the problem, as it seems, with that is that during transition it had like micro lags, and Zoom seems to be having an issue with those. It creates like bigger events.
okay, don't worry.
Yeah, so let me try to take the screen from you. And oh, now it seems to be moving. Wait, I saw your cursor move, but I still see crude.
Yeah, unshare and then share again.
Yeah.
Right screen.
Yeah. Let me take the screen from you so you can take it back.
Yeah.
Hot potato.
Okay, so take it back whenever you want.
Indian giver.
Okay. Yeah. It works. It works.
Okay. So what we have here is actually 5 waves of decline from this wave 5 that moved out of a triangle of the previous consolidation. So it means that the market is actually turning bearish here. We already have a new swing low here, which is very important. Why? Because this can either be part of a complex correction, like an irregular correction in ABC structure, and we will see a drop after another rise, or are we already completing this corrective pullback and we go straight to the downside? So,
yes,
in my opinion, we are going to see more weakness here, but based on correlations which are not working so good for the last few months, the only thing that worked very good is probably the 10-year US notes. The downside may cause more upside on those commodity currencies versus Japanese yen. That's why I think it's quite stable correlation. I mean, if you look at euro yen, if you look at pound yen, we are at the lows there. But commodity currencies are looking quite different. I mean, commodity currencies.
To be honest, since you mentioned Aussie yen and Kiwi yen, in both cases, I like them to the upside because what I see from a technical perspective is a nice break above descending wedges. And now we've spent several days consolidating in what looks to be a corrective move and then a continuation higher. I see that you've drawn there Aussie yen as an inverted head and shoulders formation, and it might as well end up being one as well. But if you draw it differently, you'll see that you could even mark the last part of the depreciation as a descending wedge from which we have already broken above. So one way or another, it seems like it's trying to put in a nice reversal.
Yes, exactly. I really like this interpretation of head and shoulders pattern.
No, I'm with you. A break above like 76.20, 76.30, I think is going to be a very nice signal that we're headed quite higher.
Yes, exactly. And also, if we consider that we have on the hourly chart, we have already personality or look of the price action that looks like a correction, we can assume that the next push will be to the upside, because this drop here on the first leg down from July highs was actually in 3 waves. So at that point, either that could be marked as the end of a corrective movement or part of a complex correction. But in both
it was the latter,
correction.
Part of a complex correction. Yeah.
So I think that the next leg will be to the upside, and eventually we will see a push above this neckline. Also, if we take a look on New Zealand dollar against Japanese yen, here as well we can see a 3-wave decline from the highs. So I think that eventually we'll see more upside here as well towards 73. CAD yen.
CAD yen already had, I was showing that many days ago. Cadhian, if you see, bottomed also in an inverted head and shoulders formation. It's not that pretty, but you can see that where you have the end of Y, yeah, there is, yeah, exactly, yeah, that one.
Yes. Yeah. Actually, but what is really important at this point is that we have seen a push above this trend line that actually was retested a few times here. So I think that more upside will follow. But
the target, by the way, of the inverted head and shoulders formation is at 84.15. So there is more upside just to even complete that. Yes,
and actually that's a very nice level as well compared to the previous swing high from April.
Yep.
84.30. So generally I think that commodity currencies will stay strong even against the euro. I mean, they are looking very good. Here's the euro Aussie. There's a very nice reversal going on from earlier this week. We have retraced for 50% of this wave 3, but notice that we found resistance at this middle trend line of this base channel. So either when you're tracking wave 4, keep an eye on this lower trend line support of this base channel or the middle trend line support of a base channel. But actually, trend is bearish as long you are trading below the upper trend line. Okay, so since we are seeing a very nice turn to the downside, also moving deeply into this wave B territory, there's clearly enough of price data to say that this was a corrective movement and that we are headed lower. So I'm looking for a drop towards 129.20, 129.50, but then a new recovery as a wave 2 could start to unfold. Okay, if we take a look on euro against New Zealand dollar, very similar picture here. We completed wave 4. Notice this beautiful pattern for wave 4. Wave C was equal to wave A on a pip. Okay, so it was perfect price action that actually finished this rally with a spike here, and now we are just continuing lower with an impulsive activity, as you can see, because we don't have any overlap in this current cycle. So I think that wave 5 here is on the way as well. So as I said, generally speaking, commodity currencies may stay strong.
Overperform, yeah.
Euro, pound are not looking good, at least for the short term. I mean, we could see some kind of recovery, but only against the US dollar, but not so much against commodity currencies, in my opinion.
Tell me something. I know that a lot of people stubbornly, and they say stubbornly because I have found absolutely no reason to trade those pairs for a long period of time, and I definitely don't regret for not having done so. But some people stubbornly want to, keep on trading like the Euro USD, the cable, just because, they're very popular and very liquid. I think they've been a mess, and, I've refrained from doing so, as I said. But since people are interested to see what's happening with them, what do you think about them? I mean, cable has found support at the descending trend line, and there is even the potential of some kind of a descending wedge here. Although I have to admit that I wouldn't be attempting to buy it, I find no reason to do so. I see that you're looking for more downside, huh?
Yes, I mean, I'm tracking always when market is not so clear to me. I will track more different interpretations. But what is very important rule regarding Elliott waves is if you don't see or spot a very clear pattern on a higher time frame, you go to the smaller time frame and maybe find some interesting setup for you there. If pattern or price action is not clear on a smaller time frame, switch to a daily time frame or higher time frame like monthly, weekly charts. So what is here is, I mean, we are clearly in a downtrend from a technical standpoint because we have prices moving to the downside for the last few months. So if you want to trade this pair, then this should be to the downside. But based on a daily chart, I don't see any very good wave structure to trade it. But if you go to the smaller time frame charts, you can see, let's go to the 1 hour chart. You can see that this can be a 5-wave decline in progress. Now we could be in a wave 5, in a wave 4 bounce, not wave 5 yet. Okay, so in the short term, I think that there can be more weakness coming. Also, why I like this pair for more weakness after a 3 waves of recovery is because 1.24 level looks like a magnet here. Okay, I'm sure that there are are a lot of very important orders around there. So cable won't, or pound in general, won't move until we see these levels,
very likely
down. Yes.
Being taken out.
So I think that this for the short term could be very interesting for more weakness. So cable again, I mean, if you compare with Aussie, New Zealand dollar, is looking weak in my opinion. Okay, especially after this ABC rally. We are still waiting on this wave C. Resistance is at 25.87. Okay.
Yeah, I'm absolutely with you there. I also have a horizontal support resistance area at the same levels, and there is also a descending trend line. If you draw it from passing from the May high to then the June high, it also passes from that level. So I'm with you there. I'm not convinced at all about this rebound, and I'm not also convinced that the Euro USD has found a low. I'm not saying it's impossible. That's why I'm staying away from it. But what do you think about the Euro USD? We know that it has been overperforming. We can see clearly that through Euro Pound, the cable. I mean that it's overperforming.
I still think that Euro Dollar is in consolidation. So we know two forms of consolidations. Either they are very deep or they are sideways. So maybe the current one on Euro Dollar will not be so deep as I expected, but will be sideways. But important is the 4-hour structure. Okay, so I'm expecting an ABC structure. I think that we are in a wave B, maybe of a flat. If that's the case, you still need in this red wave B.
So a lower low,
Okay. The important is that this first leg unfolded in 5 waves.
Which means we're not done.
Yes, so I think that more downside will occur on the intraday charts, but still you may stay trapped between these two very important levels.
Yeah.
If we are in a flat. So regarding Euro, I mean, it's still a mess.
So bottom line, as I've advocated many times during the past few months, stay away from it. There are better opportunities out there. End of story.
Yes, of course. I mean, you want to be, as a trader, you
want to be at where the market clearly shows you that it wants to move.
Not here, yes, of course. Right, because you will have very difficult times to survive. And
I totally agree with you. I totally agree. I find absolutely no reason why somebody would want to be, wasting time, capital, peace of mind to trade something as choppy as that. I'm 100%. Anything else that you like? Anything else that screams at you from the markets you're tracking?
No, actually, I went through everything what I had in mind.
Okay, so I have a bonus question for you then, and you can just cover like Bitcoin. What's happening with cryptocurrencies here? We've seen volatility increase substantially.
Can you see my now? I will switch to Bitcoin. Just let me know if you see it.
Yeah, we can.
Okay, perfect. So, I mean, we are probably consolidating, as you can see on each of these market. Here's the Bitcoin, here's Ethereum, here's Litecoin, and so on. So I think that we are in consolidation phase.
After this strong move higher,
I don't think that we will resume to the downside with any type of aggressive decline, because this first leg that I will show you is in 3 waves. Okay, here's the 4-hour chart. You can see here that this is first leg of a wave A, pull back, and then another drop. So this was a 3-wave movement. Okay.
So is the rebound from what I see from the end of it.
And then we got a rebound that was
also
again 3 waves.
Yeah.
Also, what was important at the start of this week, I also anticipated a reversal, is because there was a triangle in the middle of this recovery.
And we know that triangles cannot be wave 2.
Exactly. So in my opinion, there will be consolidation, still a little bit more complex. Okay, just let me move this. It can be a triangle, it can be a zigzag, it can be some other complex
Yeah,
correction.
we'll have to wait to find out. I mean,
But
there's no
what
way to
is
say in advance.
very important and very nice is that this slack is still only in 3 waves. So it's either, in one wave. So it's either wave A, and you will see a wave B bounce and drop for a wave C, or it's a wave 1, wave 2, and you will see a drop into wave 3, 4, and wave 5 to complete a flat correction.
Mm-hmm.
Okay, so I think that more weakness could be following here on.
Okay. Okay, I fully understand. What is your bigger view of what's happening here in cryptocurrencies, though, from an elite wave perspective? I mean, let's go to a larger time frame and tell me what you think.
On a larger time frame, I don't have the charts on this layout, but what is important is that once we will see a push to another high,
Mm-hmm.
we have a 5 waves up from these lows. So
Mm-hmm.
in such case, I think that even more upside will occur. But I'm sure that there will be, once we will reach 15,000, everyone will try to call a new all-time highs.
And they're going to fail.
Bitcoin, but of course, on the short term, they will fail because I doubt that market will move straight to the upside. Probably we will see another pullback in 3 waves and then maybe attack this 20,000 in 2020 actually.
So your longer term view is bullish, having to do with price. So you expect eventually fresh all-time highs, right? That's what I understand.
Clearly, it's bullish because this current rise appears to be stronger than a previous decline.
Yeah, yeah.
And previous decline cannot be counted in 5 waves, rather in 3 waves or some other complex form. But this is very clear trend. This was not so clear.
Okay.
The impulses.
Thank you very much, Gregor. Always
Thank you, Gregor.
To have you.
Stop. End your vacation already.
I think he has.
Actually. Oh, okay.
Yeah.
All right.
I'm recovering from a vacation now.
You need a vacation from your vacation.
A vacation to recover from. Yeah.
All right. Have a great weekend, Gregor. Steve, you have a great weekend.
And do we have an interview, Coach?
We do, buddy.
Okay. Enjoy.
Okay. Hi, Mac. Looking forward to having a conversation with you. And I'm now making you a panelist, so we're going to be able to hear you and see your screen. Let me see. Can you unmute him? I don't know what happened to him when you had the screen.
Let me see, Coach.
Steve.
Hey, Dale, can you hear me?
Oh, there he is.
Oh, hi, Mac. How are you?
Hi, good. Just
All
testing
right.
out this new mic.
Thank you so much for joining us today. It works perfectly. We can hear you loud and clear. If you want to share your screen, you mouse over at the bottom of your screen. There is like a panel.
A green box that'll say share.
Yeah, there is a green button that says share, and then it's going to ask if you want to take the screen away, and you do that.
Okay, great. All right, give me one moment.
And you can select which screen you want.
There we go.
Yep, perfect.
Okay.
How
are you guys? How's everything going?
Good. TGIF, huh, Mac?
TGIF, absolutely.
Okay, so I found you on Twitter, Mac. I don't remember exactly what the tweet was, but it caught my eye. Mm-hmm. And I appreciate you coming to be here. You know, it's my belief that it's not always the most famous. It's not almost the most famous people that are the best traders with, 50,000, 250,000 followers, that they might be great marketers, but they may not be as great in the market. So, you're one of my searches for diamonds in the rough. And thank you for joining us today. How long have you been trading?
Going on about more or less about two and a half years.
Okay, so fairly new. Why don't you tell us what you were doing before that, and how trading happened to you? Who introduced you to it, and were there any influences, or are you self-taught?
I'm partially self-taught, but the way that this all kind of started, it was kind of a bit of a crazy story, but I was a sales manager for many years, and I was hiking with my girlfriend upstate. I live in New York. I fell off a cliff, so broke both my legs at the time. I was in a wheelchair for about a year.
Wow.
And got fired from my job. And I'm like, what, what is this? So I switched after I ended up rehabbing, came back around. I changed careers. I went back to school. I work in healthcare, and I wouldn't say the money's as great, but it's more fulfilling. So, long story short, while I was in the hospital rehabbing, this was back in 2015, I learned about Bitcoin then. I said, whoa, what's this? I bought some, I traded it, made a little money, lost a little money, kind of forgot about it. Fast forward to 2017, my father was mentioning, Ether. He said, hey, this Ether stuff is going way up and it's interesting. So we both put a sizable amount of money in. We invested in, I believe, two ICOs, and we made some money and then flipped it into Bitcoin. This was back in about October 2017. So we purchased Bitcoin then, and just rode.
What was the price in October 2017?
What was it?
What was the price back then?
Then I believe it was in the. I'm just going from memory.
Under 1,000, right?
No, October 2017. It was around the 5Ks, I believe.
Oh, okay. All right. So you were long for that whole blow off into 17,000. Did you? To me, one of the most difficult parts of trading is holding a position, right? So, it's easier to make the call and make the trade, but having the patience, that move, that parabolic move, I almost think you have to either be naive or greedy to be able to sit that long. But what were you doing last year, at the end of last year, when we were trading, or it was the year before, up around 18,000?
It was a big distraction. I mean, I was really new to the whole thing, and I took a lot of my attention. I just focused on it every day. I didn't know why it was going up or when it would go down. I just was kind of following the big accounts on crypto Twitter, trying to see what was going on. So I sold around 15K.
Nice.
I sold around 15K. I ended up convincing my father to sell too. And then sometime around I would say January, February, I noticed that my father was back in and he was losing money. So he was following, I won't mention the names, but, two accounts on Twitter. And he was, basically mimicking what these traders were doing. And he was losing money, losing tons of money. And I took it personally because he also lost money many years ago during the dot-com era on Cisco. He had lost quite a lot of money back then. So I took it upon myself to learn how to trade, to try and help my father, gain the money back that he lost. He's actually a waiter, by the way. So, hardworking guy. He's been doing that for many years. Okay. So I was basically trading the normal way most traders trade on crypto Twitter with MACD, RSI.
Yeah.
Bearish.
You're pretty naked right now.
Yeah, I'm very naked right now.
All right, make sure your shades are drawn. All right, buddy. Anyway, just in case there are any peepers there. So, okay, so you tried some momentum indicators. Why did you let them go?
I was losing money. I mean, for the most part, also, I started with MACD and RSI, and it really wasn't helping. It just was not really I wasn't making money. Either I was breaking even or I was a little bit in the negative. So I noticed when I was looking at price, I mean, just to kind of explain one other thing. So I work in healthcare. I'm a physician's assistant. That's what I do.
All right.
And to become, it was quite a change from sales to physician's assistant, but to become a physician's assistant, you have to take physics, organic chemistry. And in the sciences, we learn, that you have to look at everything and look for patterns. You want to look for patterns in science. You also want to look for patterns in your patient, in their vitals. So when I'm looking at this chart, I'm like, you know what? I'm seeing some patterns and they're starting to come together. Let me try something and see if this works. So I started to make basically a trading book, a personal trading book that I have listed with fractals. And I was looking for, you know, replications and price patterns and everything from NASDAQ to Bitcoin, from Bitcoin 2017, 2018 compared to 2013. I posted a lot of this on Twitter, and it started to kind of come together. And I'm like, okay, this is working. And
so your healthcare background drove you to fractals.
Yes. Well, it was
Wow.
a science. It was a science.
You know, I hate to use a pun, but what a lucky break. What do you think, Mac? I mean, a lot of things happen that way in life. Things that you think are a disadvantage for you or a crisis actually turn out to be something that worked for you. And it sounds like falling off a cliff, like Wile E. Coyote, actually longer term changed your whole life. And I bet you're a lot happier now than you were when you were a sales manager.
Significantly happier. And
okay. There are two kinds of sales managers, right? Ones that have been fired and ones that will be. You ever hear that?
Oh, that's a good point. That's a good point. I still have a lot of friends in there. It's the telecom industry. I mean,
yeah.
Some of them may be listening right now. They may recognize me. I'm pretty well known.
So science, the healthcare background led you to looking at fractals.
Yeah, it did.
In what way? How did healthcare lead you to look at fractals?
Well, when you look at the patterns of, basically the rhythm of the heart and, how it's supposed to look, especially now I'm going to biology. That really, kind of meshed well with what I was seeing on the screen. I'm like, okay, there's a pattern, with the rhythm of the heart. And it seems to be there's a pattern with price too. I also noticed, when I was digging through my old chemistry notes, when you look at the atomic structure has, many different types, tetrahedron and so on, many different types. And with atomic structure, there's specific fractals for each type of, atomic structure and atom and things of that nature. So I just I said, okay, I have to focus on price and look for patterns. I have to look for patterns. And they just started to come together. I posted a fractal on Twitter right around December 2018,
Yeah.
Basically, comparing what we're seeing right here on the screen to 2015, and that fractal played out very well.
Beautiful.
Now the fractals, they don't always work. So
nothing always works.
No, so I had to move forward with volume. Now, as you said, I trade volume. I mean, I trade naked. And a mentor that I have online, his name's Mr. Jaza. He's pretty well known. He had a discussion with me at one point mentioning that, volume precedes price. So I started to really focus on volume. And that's really all I use for the most part. Anything that has to do with volume, heat maps, order flow, things of that nature. I don't use any indicators besides that.
Okay, so that's a great point, and I believe in the theory. But then how do you explain all the red bars on volume, especially late, really since the bottom? You had big down spikes in March and big ones in May and June, and the market continues higher. How do you explain, how did you interpret those high volume down days or selling volume for a continuation move to the upside?
Okay. Well, on the chart here, I actually had, this is incorrect. I have to change the volume setting. So when I'm looking at,
that's a different picture.
Yeah.
Okay.
When I'm looking at when I'm looking for a bullish volume, I'm looking for basically seller exhaustion. So like a high, for instance, right here, like a very, large amount of selling. Predominantly.
But it was a beach ball. Bullish. They couldn't keep it down there.
I'm sorry, what?
It's like a beach ball underwater. They couldn't keep it down there on that red candle.
Correct. So
okay.
I'm looking for seller exhaustion. Another thing that I like to look for with volume that works very well, high to low. So, we get a high spike, for instance, let me give you an example. Right here's a good one. high spike in volume. There was a breakout. Now, you see how volume's going down and price is kind of meshing lower? And now we're getting that inside green bar here. I'm looking for a move higher, move higher. And in regards to bearish volume, most of this is bearish to me. It's very flat while price is going left and right.
Yeah.
And you can see that price was pinching together.
Yeah.
You can see that it's consolidating.
Compressing.
So,
yeah.
For the most part, price high, volume high, price low, volume low. I'm looking for a move higher.
So are you exclusively a crypto trader?
Right now, yes.
Okay. So one of the things I've been reading is with this tremendous move in the majors, which I consider, in currencies, it's dollar pairs. And in crypto, it's Bitcoin, Ethereum, Litecoin, that the altcoins have not really recovered. Are you seeing the same thing, that altcoins were kind of like pink sheet stocks and bulletin board stocks, that unless you have good PR and people come in and they actually pay people to buy it for volume, that's called investor relations.
Mm-hmm.
You seen anything with that disparity, maybe altcoins having a chance to move with the majors? Have there been some?
Yeah, I mean, I'm looking right now at Link. I think Link looks good. 1 second here. Create a couple charts. Zcoin looks. Here we go. Okay, Link. Okay.
Okay. So
yeah, this
you
is a
trade
chart
these too. Okay.
Yeah, this is a chart that I put together last night. These lines, just to explain, this is just a basic algorithm bot that I have that helps kind of see a little bit support resistance. But as you can see prices coming down, volumes coming down, just as it did back June 13th towards June 24th. And that, to me, that's a sign that there's a move coming. And I'm looking for a move higher here.
Okay.
Pretty basic pattern. It played out very well here. And then with, let's see, Zcoin, I'm seeing a fractal, potentially a move higher, based off this fractal. Price and volume are descending together, which is a good sign. But besides that, I look through most of the altcoins. I don't see really many others that catch my attention.
Okay.
Right now,
Let me ask you this. There are a lot of people that are gold traders but don't own one gold coin. Okay, you could put any title on top of a chart and be a trader. Are you also a believer in the long-term story of mass adoption and hold Bitcoins in one of those electronic wallets? You own it and hold it, hold on for dear life, as a lot of crypto people say. Do you believe in the story, or are you just a trader trading candles?
I'm a trader trading candles. I don't trade news. I don't trade fundamentals.
But do you own Bitcoin? Do you own it and have possession of any crypto?
Yeah. I have possession. I have my own wallet here.
Okay.
And
is it leather?
What was it? No, it's not leather.
All right.
It's a digital wallet.
Same stale joke by Dale. All right. So if you're a trader of anything and it's all just charts, have you explored fractals in any other area besides crypto? Or, it's completely understandable if you just trade one sector, one type of asset class, because I knew guys on the floor that never left one trading pit and did quite well. You don't have to be diversified in a million things, do you, Mac?
No, I see what you're saying there. You have a good point. I look at fractals, with other markets also, stocks. I posted a few charts. Do
you have anything there? I'd be interested in what your fractals are saying.
I see something with the Dow Jones right here that I was looking at last night, which is interesting. Again, I don't trade this market, but I'll post a chart. Sometimes it's right, sometimes it may be wrong. It's something that catches my attention.
Okay.
So yeah, I see this. This right here, the 2011 area to 2015, and this fractal speaks to me. I mean, it really does catch my attention. I think it's something, I'll post this later on today, you know, to be aware of. So based off this, potentially, you know, we could see a move towards, you know, the 24 area here, 24.8.
And then blow. If the fractal's correct.
With fractals, you know what I noticed? I've been using them now for going on quite a few months, almost a year. I'm looking for I would be looking for this move down. After that, I would want to see the chart again, just to kind of get a feel for things. But after that, you know, maybe a move higher, but I would be looking for a move towards 24.8, 24.9. And
it's a cool chart, Mick. Thanks for sharing it.
Thank you.
You have anything on like dollar or gold or any other fractals outside of crypto? Because I could kind of see that, you know, it's hard not to see the bull case in crypto right now. So I'm wondering if there was anything else. And while you have that up there, Mac has kind of an unusual handle. So that's not MO, that's M0, right?
Yes, I actually did want, I just wanted Mac, but it wasn't available.
So a lot of people, you know, will look for you and they'll put MO in there instead of M0. So to follow Mac right there, write down his Twitter handle. I think he's a great follow. And now that I know he's looking at these fractals. So look at this. Okay. What do you got? Everything higher.
No, this, you know what, fractal wise, that's really all I had prepared. But I can show you something from the past that really, that worked out well. You know, it was a response to JC Peretz. But it was a fractal that I noticed back in December 2018, you know, Bitcoin, silver. As you can see, silver was making a move higher already. Bitcoin was consolidating. And then when we fast forward to April 2019, you know, we could see Bitcoin you know, in a way followed the path of silver. It did make a move higher also.
I've never seen that comparison made.
Yeah, I thought that was interesting. But the reason I bring that up actually, because it's very pertinent and it connects with kind of something I mentioned earlier about the Dow. You see how you know, silver did make the move up and Bitcoin followed in a way. After this, the charts diverged, and I really wasn't basing anything else, you know, any other moves off of the silver fractal. I just kind of moved forward from there.
Okay, that's an interesting take on fractals, because a lot of people just you look for fractals to give you a key for the next move, not for the next year, just for the next play.
Yes.
And then you reassess the fractal. So, you know, that's a pearl right there, Mac, that because a lot of people marry these fractals and think that they're going to just continue to repeat as time moves forward. So I learned something from you about fractals, that you could dissect them and, you know, not have to follow them for 6 months, but just look for the one key comparison and go with it, and then really not have an expectation that they're going to continue to repeat or rhyme for the long term. Do you ever find any that do repeat for the long term over, say, not just one move, but several moves in a row?
Yes, actually, I posted a really nice one. Let me just pull it up here. Here we go. Let's see. Not this. One moment.
And that's a good picture of you right there, Mac. That's when you were an insurance salesman, right? All right. Anyway.
You're a funny guy, Dale.
You know, I mean, when I dress like that, I was having lunch with W.T. Gann and Jesse Livermore, and I've been around, buddy. All right,
cool.
So
I know you guys don't have a lot of time, but I mean, if
we have time,
but I posted a nice fractal, you know, a couple nice fractals on Bitcoin that worked out well. I don't have to scroll through it now, but you know, I mean, for the most part, just to answer your question, I'm looking for a move, you know, going basically a week to maybe 3 weeks out, but not longer than that. I mean, I wouldn't say macro is my specialty. I'm more of a short-term to mid-term, you know, trader, and I see things really well over the next like week, 2-3 weeks, for the most part.
Do you
That
have a
can
business?
change, but for the
Do you
most
just
part.
trade your own account, or do you have any kind of business model? Do you teach? Do you have a
Yeah, I have a group.
service?
I have a small group with a few hardworking traders that we've been, two of which have been working with me, and we've been, working off each other for going on for quite a few months now, and things are going really well. I haven't expanded, in any realm yet, but I have a small group of hardworking traders, and we all kind of bounce off each other, and
Yeah, it's great to have a community. We only have 2 eyes, right?
Yeah. But I do trade for my father, and I also trade. I do trade for myself, so it's been going
Okay.
well.
Thank you so much for being here. Like it or not, you're now my trading warrior, brother.
Thank you, Dale, for inviting me. I appreciate it.
Yeah, Mac, it was great. And, thank you for being here to edify our community and give us a different take on fractals. And what an interesting journey you had from really your legs being broken led you to all of this and a different career. What a great story. So I hope that pips continue to rain down on you and you continue to help people with both their health and their financial health as a trader. So good hunting to you, buddy.
Thank you, Dale. I appreciate it.
All right, everyone. That's Mac, and you could follow him at capital M0 CKK and learn about fractals from Mac. Mac, have a great weekend, and let's do this again and keep in touch.
Absolutely. Thank you, Dale. You take care.
All right. That's a wrap for us, everyone in Face. Have a great weekend. Remember, don't just count your pips, count your blessings. See everyone Monday. Adios.